morning and welcome, Patriot Radio News Hour. I'll get it out. Joe and Jason here on this Wednesday. I hope it finds you well. Happy hump day to everybody out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And the Japanese yen already this morning broke above 155. That's a range now where we're expecting intervention at some point from the Japanese. We'll see a new, 34, 35 year low. Bad oil inventory reports, huge draws in oil inventories, pushing up oil prices today. Gold is rallied back today. So after China upped its rate margin requirements led to Monday's sell-off yesterday, pretty flat day overall yesterday for gold, back in positive territory. We've got earnings seasons kicking off here. The two big laggers, Boeing and Tesla. Boeing had earnings today. I guess the good news, it wasn't worse. I guess they were expecting, horrible news as it was. I guess it was a little less horrible. One of the largest cash burns ever. They burned almost $4 billion in cash, but I guess the good news is it wasn't as bad as some had expected. And then Tesla looks like they're going to lay off another 6,000 workers in California and Texas. But to stop the run on the stock, they're saying, hey, we're rushing out a new SUV for next year. I think Wall Street took that as good news. I never like it anymore, Jason, when I hear companies say we're going to rush a product out, because that usually means they have, look at Boeing, right? They end up with lots of problems.
Yeah, you don't want to rush things too much when you're making products that need to be right the first time out the door, like an airplane. But, we've been looking at this, haven't we, Joe, as things have been getting a lot more, scarce, whether it be real or fake, and the inflation's been roaring, making things much more expensive. That seems like the quality of things is dropping like a rock, doesn't it, Joe? And a lot of these companies aren't able to hire people because they're not paying enough to keep up with the inflation. So it seems like quality control is slipping with all this inflation.
Yeah, and surging bond yields today. Another record-size auctions. Yesterday it was 2-year notes. $70 billion now. It's incredible how much has to be sold every single day. That was actually a fairly good auction, in my opinion, anyway. That one of the better auctions. Of course, they had to pay almost 5% just to borrow money for 2 years from the U.S. government. Now, this is kind of this pain threshold, but today it's 5-year notes. $69 billion. So another record supply day, the 10-year note back to 465. So remember, it got down to like 459, and then everybody remembered, oh, wait, Jason, we got to sell record amounts of debt. And now with the Japanese currency at 155, a lot of people are saying not only are we going to have to sell record amounts of debt, but now we're going to have to absorb Japanese intervention sometime here, whether it's today, tomorrow, next week, but very, very soon.
It's kind of like a boat taking on water, isn't it, Joe? Sometimes there's just not enough buckets throwing the water back out of the boat to keep it floating. Isn't that kind of how it feels?
That's a great analogy. It's like, right? How many fingers can we put in the dam before it finally gives way? But we did get some housing numbers. They're not good. We know that. Mortgage demand down again, right? Rates are super high. Down 15% from last year's terrible year for home purchases, right? Even, can't refi. And Jason, rates now at the highest of the year, and by the looks of it, going to go higher. And then Jamie Dimon saying, get ready, the 70s may be back. Just what we've been telling people from day one. This could be a return to the 70s.
Could be worse, too, because remember, after the 70s, they recalculated inflation, right? So you kind of got to double all of our numbers. So back when the inflation we've had recently crested at 9.1, that's over 18, right? So if this crests higher than the previous wave, which is what happened in the 70s, what are we going to get? 10 or 11? Double that to like 22? I mean, how incredibly bad can it get? Or will we just simply keep shutting down ships and ports and keep crashing into bridges and trains falling over to try to keep it under control, Joe? I don't know. How bad will it get, right? That's the whole point. How, the soft landing that they're trying for.
Yeah, and again, record amounts of government spending. It just doesn't stop. It's unabated. The Federal Reserve kind of, once again, right, we kind of, we're watching the data. I mean, I don't know what they're watching. I really don't know what they're watching. Well, and I guess now I'm lying. Of course I know what they're watching. They already know. In their eyes, where they sit now, the Fed funds rate sits now, they don't think they can go higher without wiping out the banks. I mean, I think that's really the big issue here as they watch this play out. And now Jamie Dimon's talking about stagflation and a return to the 70s, which just tells you the Fed, he doesn't believe that the Fed's going to fight inflation. We'll be back after the break. 800-951-0592. Joe and Jason here on this Wednesday. Quick look here at the markets. The Dow is down 150. The Nasdaq's down 12. I'm sorry, the S&P's down 12. The Nasdaq is up 13. Gold's up 5 here, 23.32. Silver is unchanged at 27.35. The 10-year note, will watch how this auction goes. Another record auction again today. Man, it's like, we say it every day now. I mean, that's just the new normal here. $69 billion of 5-year notes right now, 465 on the 10-year. Crude oil, I think everyone's getting out of their shorts right now as a big drop in crude supply. Right now, crude's just below $83, but I have a feeling it's getting ready to go the other way. And then watching this yen, the Japanese yen sitting right at 155. And now Jamie Dimon, who's been talking about, hey, we can have rates anywhere from 2 to 8%, maybe even higher than 8%. Now talking about we're getting more and more like it's going to be the 70s all over again. You guys got to take care of business. Get your assets protected. You got to get your gold, get your silver put away. I'd be very careful here with Wall Street as we continue to see the same thing with these companies. Hey, we raised the snot out of prices, but revenue's continuing to fall. And now Jamie Dimon's talking about deposit compression. Check out our friends. If you got more than $50,000, check out our friends at Y-Refi. Because at least you can get a fixed rate of return, which you know what it's going to be every single month. Up to 10.25% returns, not correlated to Wall Street. That's kind of the beauty of it. It really doesn't matter what happens with Wall Street, what happens with the Fed. Doesn't matter what happens with inflation. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI-24. Remember, you got to have at least $50,000. Here's a great thing. There's no fees. They don't attack your principal. They don't play any games. Kind of like when you deal with us at Patriot. So call them. 888-YREFI-24. But, yeah, Jamie Dimon saying, talking about much stickier inflation, higher rates than what the market expects. He sent a letter out a few weeks ago talking about being prepared, saying that J.P. Morgan, the bank itself, is preparing for interest rates from 2%, which would mean collapse, right? That's what that would be, to 8% or even more. He reiterated that yesterday. We would be able to handle stagflation as well. By the way, the bank, first essential quarters where key revenue sources dropped in back-to-back quarters, the bank said a decrease to deposit margin compression. In other words, gosh, we got to pay more for deposits. But it was the second part that caught my eye, Jason. Lower deposit balances. And this is our biggest bank saying, hey, there's less money in these accounts, whether it's business accounts, personal accounts. Not only do we have to pay more for them, Jason, there's actually less money in it.
Yeah, I've had a couple people telling me just in the last couple of weeks that mini banks that are empty. Hey, I just went to my normal mini bank, the little automated mini bank, and there was just no money in there. And then another comment or two about deposit or withdrawal limitations dropping, Joe, and then of course other mini banks where, hey, I used to be able to pull 800 out of the mini bank, now I can only pull 300 out of the mini bank. So definitely a tightness when it comes to the physical cash, Joe, it seems, and deposits and withdrawals being restricted.
Yeah, and the first thing he talked about on yesterday was the large amounts of government spending. Of course, we just threw another $100 billion out there. Yeah. Efforts by the Fed to shrink their balance sheet. I think we're going to see at the next Fed meeting, they're going to roll out a balance sheet, a reduction, if you will, in quantitative tightening. I think it's going to be another catalyst for gold. Obviously, wars, migration. I guess that's a nice way of saying, what's going on at the border with the illegals. At the same time, he said the U.S. economy's been booming. Well, yeah, right? Think about it. All the money they print and pump into the economy, I would say yes, it's been saying that it's been resilient. But he says that it's not enough. We're going to have to do more. We're going to have to do better. He said that I've always said that I would love it if J.P. Morgan could be president. Jamie Dimon. I've always said I would love to be president because I guess Jason, he thinks he could fix it.
Everybody says they can fix it, Joe, and especially when they're running for office. But getting something fixed is, I don't think the federal government's been trying to fix anything for decades. But that's an old story, isn't it, Joe? Well, elect me, I will fix things. Elect me, and I'll fix things. And all they do is they fix their higher position in the hierarchy of politics. Don't listen to anybody saying they're going to fix anything right now, Joe. You got a broken system. It's not meant to be fixed. It's meant to, drain the time, blood and money out of the citizenry to give it to a different class of society.
It's going to be very, very interesting with what is going on. Obviously, with the record-sized debt auctions on top of now J.P. Morgan. Okay, this is the largest bank. And we're thinking about, a lot of people, and I mean a lot, and a lot of businesses left smaller banks to go to these bigger banks, right? Because it's safer. Why is it safer? Well, they're too big to fail, right? So it's got to be safer. And now Jamie Dimon is saying, hey, guess what, guys? There's not that much money, right? There's a lot less money in our deposits than there was before. And based on what the Fed and the government are doing, it looks like we're heading for stagflation, right, Jason? Think about it. California, minimum wage to flip a hamburger, $20, right? What are all the restaurants screaming about? Oh, my gosh, We're going to be stuck where if we raise prices and we've got to pay the employees all of this money, we're going to actually go out of business. And that's kind of what happens with stagflation. One of two things. Hey, the wages have to go up, but it has to go up for everybody. It can't just be the guy flipping the burger at McDonald's getting the $20. Everybody else has to be getting $20. Well, let's face it. That should be one of the lower paying jobs for people to continue to go to the fast food restaurants. The other day I was talking to a friend of mine, and they were saying, hey, we went to McDonald's. They got a 2-year-old and two adults, $35, Jason, just to get a Happy Meal and, 3 meals. And that's a fast food place. I mean, that's supposed to be the cheap place. And now Jamie Dimon saying, get ready for stagflation, get ready for what we've seen in the 70s. And that's what a lot of people have been talking about, not just with commodities, but again, I don't think wages are going to go down, and I don't think housing's going to go down. And these are things that the Federal Reserve continues to say they hope happens.
Yeah, if we don't have a hyperinflative situation coming up on us, then I think we're already in stagflation. I mean, the inflation's outpacing wages already since 2021. So, I saw a couple of videos on McDonald's, and people now can't afford to go to McDonald's. Average price of a quarter pounder with cheese is it's just a little bit less than $6 now. And we talked about stagflation a lot in 2021, Joe. It's been it's way back 3 years ago. You were hitting demand destruction, and you're talking about stagflation. And when you can't afford McDonald's, I think that's demand destruction, Joe. I mean, that's if you can't eat your really bad for you unhealthy fast food for a cheap amount, then I think stagflation's already here. Now, the only question is, do we get a massive depression that the Fed can't stop, or do we have hyperinflation that accompanies this? And maybe soft landing is stagflation, Joe. Maybe that's what a soft landing is, a lower standard of living that just creeps up on people, and they just start to accept a lower standard of living.
I really think that's probably, if you're saying today, what's the most likely outcome? And let's just talk the rest of this year heading into next year. I think this is what we're going to see. I think stagflation is the likely outcome. The Fed is unwilling to fight inflation any harder than it did because the financial system and the stress that it's in. And then you start looking at rates. We talked about it yesterday with these crazy this debt level. It is incredible how much more we're paying in interest than we were just 3 years ago. No, 3 years ago, we were paying like $300 billion in interest. We're going to be, by the end of the year, according to Bank of America, it's going to be $1.6 trillion. I mean, that's so hard for people to wrap their head around how big of a difference that is. But you got to remember, we went from essentially 0 to 5.25. And the inflation was supposed to go away. It didn't. The fact of the matter is they said, well, we just need more time. Well, the time's up. And the realities are inflation is still here. And now the head of the world's largest bank is saying, hey, I think it's the most likely scenario, Jason, like we just said, a return to the 70s, return to stagflation. And already at a time, it's such a different time. Back then, the debt in 1971 was $400 billion. We didn't get to $1 trillion until 1981. But could you imagine what the debt would look like? Jamie Dimon was talking about 8% or more. I mean, during the 70s, we got to almost 20. What do we got? I think we got to 20%. Then, Jason, that's impossible. There's no way we could pay 20% interest on the debt. It's just not possible.
Default bankruptcy, maybe a direct bankruptcy, I guess, Joe. Bankruptcy on the debt that you currently own, and that just ends up being a world catastrophe, right? So, Harry Dent, Joe, the guy that's always talking deflation, he just seems like an idiot and talk about gold going down to $700. If financial leadership actually just got away from the Fed and just let things go back the way they should on their own, let capitalism run its course through private companies, we'd have a massive depression. But the thing that Harry Dent doesn't understand is that that's not what these vultures want. They want to enrich themselves and their rich friends, so they have to have inflation, Joe. And it's very interesting how we talk about, hey, they went from 0% to 5% very quickly, and inflation was racing, right? Remember, transitory. Well, it's almost like they needed to get that inflation motor running before they were going to try to stop it from going out of control. And now they're trying to kind of have this higher inflation. I think that's the goal. I think that's definitely the goal, Joe, this higher inflation, because like I said earlier, look at all the weird happenings, the things that are inflative in nature, constricting supplies and shipping lanes and all this other stuff to keep the inflation up. I mean, the boat crashing in Baltimore and the war going on in the Middle East, these aren't things that make it slow down into recession. This makes things get more expensive, Joe, right?
I'll tell you what. Everybody better buckle up, because it's going to be a while. We don't call it the year of chaos for nothing. We'll be back. We're back here, Joe and Jason, Patriot Radio News Hour on this Wednesday. And, we talked about China bumping up their margin demands on gold paper contracts and the big reason probably for the sell-off that seems to be pretty much done now anyway, at least the last 2 days, pretty calm here in the gold markets. But interesting news when talking about gold in China. Bloomberg is reporting that unrelenting Chinese demand, retail shoppers, okay, so that's consumers, fund investors, futures traders, the Chinese central bank itself looking to gold as a store of value in what they deem uncertain times, unprecedented times, and talking about how China and India, used to battle for who's the biggest gold consumer in the world. According to Bloomberg, that battle's over. China now squarely the largest gold consumer in the world. Gold jewelry demand up 10%. Retail bar and coin investment, get this, up almost 30% in China. And there's more room to go. And they're talking about both China and India. They put a lot of capital controls on their citizens. So it's not easy to take your money and invest, say in the U.S. stock exchange, or to buy, buy a company like Microsoft or Apple. These things aren't easy.
No,
and
it's
with these restrictions, Jason, gold now is turning out to be okay. Well, if I can't, go out and do what I think I need to do, gold is now becoming the main option that they're all turning to.
That's right. The policy that you're talking about, China, that used to be how what a lot of Americans used to stomp around and say, right, Joe? So, hey, buy American, only do Americans, keep it in America. And that's really how you do keep a local area strong. But I don't think China is completely like that when it comes to, well, how about this? That's how they are with their citizens, but I don't think it's how the government thinks, right, Joe? I think they want to expand. They want to become the next America and have very cheap labor, let's just say in Africa, working to build their country and build their government even stronger. But you are right. The citizens are kind of wrangled in what they can watch, what they can do, what they can spend their money on, Joe. I guess it doesn't make America seem so bad when you see how China is restricted.
Yeah, I mean, we can, if you didn't like the U.S. stock market, you could go buy the European stock market or the Japanese stock market or this. That's not how it works in India. That's definitely not how it works in China as well. And we're starting to see the overwhelming amount of gold heading into China. China's already the largest gold producer in the world. It's not that close. And their production keeps falling. So they kind of hit peak mining a couple of years ago. But they don't export any of that, by the way. But just in the last 2 years alone, 2,800 metric tons have been imported into China alone. I mean, that's 1,400 tons a year. I mean, Jason, it's incredible, the size of it all. Not to mention they mine about 400 metric tons, give or take, a year. It's astounding. You know, China's consuming over half of the world's mine supply just by themselves.
Well, they must have a feeling where it's going, right, Joe? The average guy, we can't be the big player when it comes to stuff like gold and silver, but you kind of got to follow the money sometimes, Joe. And in this case, gold is being swallowed up in the levels you're mentioning with China. It's kind of a message, Joe. That's why you're putting it on the air, right, Joe? It's kind of a message, isn't it? What is China telling the rest of the world, even if they don't want the rest of the world to do what they're doing?
And again, I think it points out the biggest thing that Bloomberg was talking about was there's not any other good options, and this is why you're seeing so much demand coming out of China. And listen, they got 1.4 billion people, right? It's almost unlimited. Same thing with India. Now you also got to factor Japan, right? This is a new player in the gold market as their currency continues to devalue itself. Right now, even the Japanese are buying gold. That is something that really in the 20 years I've been doing, that's something I'd never even seen. I don't think I ever even talked about Japanese ever buying gold before, yet here it is.
Yeah, there it is, Joe. And I don't think there's very many countries that aren't buying gold now. I mean, especially the bigger markets. I don't know about the UK. I don't know about England, but it seems like every other country is putting something into it, Joe. You know, there's definitely a sense that something is getting ready to happen, Joe, for sure. When there's this much, especially with the central banks buying at record levels.
Yeah, this is going to be again. I think most people are sitting here looking at what's happening and seeing that there really isn't great options here. The U.S. debt levels continue to explode higher month after month. I mean, this is tax time, right? We had tax revenues, and we still need record debt auctions. That's not a great sign. The Fed essentially dying to convince everybody that they're going to be able to cut rates. Yet the inflation data and what everybody else is seeing, they're saying the exact opposite. Everybody that I talk to out there is saying prices are continuing to rise, wages need to continue to rise. There's still places that, it's kind of funny. Some places can't hire enough people. And then other people are saying, I can't get a job. It really does depend on what it is you want to do. If you don't want to work fast food, or you don't want to work retail, or you don't want to work some of these lower paying jobs, these better paying jobs, Jason, are getting harder and harder to find because these companies got to pay more and more. And so, you know what? They're doing what anybody else would do. Can we do it with less people because I got to pay these wages?
Yeah, and I've noticed a few times I get out, Joe, that there's, whether it be a store or a restaurant or something, some places are staffed up, trying to beat the competition. But a lot of these places, it seems, less and less getting help at the stores, less and less ability to purchase drives to get through and get out of the store. There's definitely some places getting ready to run skeleton crews just to make ends meet, right, Joe?
That's what stagflation does, right? I mean, get ready. Everything's going to cost a whole heck of a lot more, according to Jamie Dimon. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. And today's special, it's a pretty good one. $5 Liberties. These are the old 1866 to 1907 quarter-ounce gold pieces. Back when our currency was gold. That was the currency. It didn't allow for inflation. See, and this is what the banks hated. Most people don't realize the banks hated that. They wanted a debt money system so they could charge interest and make money. And we're now suffering the consequences of it because it always ends up the same way. They can never help themselves. They can never be financially responsible because what happens? Well, they print too much money. And then the economy needs to go through a recession. And then the banks are like, well, we don't want to go through a recession. Okay, well, what do? Well, let's print more money. Which makes everything cost more. And they've been trying to do this. Now now look at where we're at, right? We've got a debt that can never be paid. We're playing really with, might as well just be monopoly money. That's kind of really what it is right now. But we've got $5 Liberties. They used to be $5. Matter of fact, they were $5 all the way to the 1800s, all the way to 1933. And guess what? It'd buy the exact same amount of stuff as it did in 1866, 1876, 1886, 1896, right? 1906, 1960, the exact same amount of stuff. Now, the longer you leave money in your bank, the more worthless it becomes. I mean, it really is. It's a sad state. But we got them on sale right now, 1 through 19 at $655, 20 or more, $650 at 800-951-0592. And Jason, this is kind of, how it gets. This is something where when we talk about inflation, you see it in the gold price. You see it in anytime you go to the supermarket, anytime you put gas in the car, really, anytime you go to a fast food restaurant, a regular restaurant, it's right in our face every day.
Every day, Joe, every day. It feels like that's what we've been talking about every day. We talk about inflation all the time, even before the inflation got hotter in 21, 22. But now it seems like every day, because, there's items you don't purchase every day. But you got it in the back of your mind. I remember the last time I bought that thing, it was $30, and you walk into the store to get another one, and it's $45. It doesn't happen all at once. Your food and energy, your monthly energy bills and your daily food, that's the easiest one to look at. But it's always these other items, right, Joe, that you have to buy every quarter, every 6 months, every year. And it affects everybody in such a major way, and it's why you've got to protect yourself as best as possible from these situations, Joe, by buying gold and silver, obviously.
I'll tell you this too. You got an IRA out there. Maybe it's an old 401k. You wanna get into precious metals, but hey, I don't have $20,000, $50,000, $100,000 laying around sitting in my bank account. You can roll over old 401ks, IRAs. Into a precious metals IRA. There's no penalties. You don't have to pay taxes. You don't have to do any of that stuff. You gotta, let's just say you got an IRA with $500,000 in it, and you want, you're saying, hey, I want to put $100,000 into gold, or I want to put $200,000 into gold, but I can't sell, $200,000 because look at what I'm going to get murdered on my taxes. You can roll that penalty-free, tax-free, right into a precious metals IRA. We can help you do that. If you want to call us, Arlene handles all of our IRAs. So she works Tuesday through Fridays, and she does all of our IRAs. If you want to call us, 800-951-0592 to do that. The nice part about these IRAs, the one cool thing, is you can take possession at your discretion. It'll be just like selling at that point. But it's nice to know, hey, yes, I would rather have it at my house. I would rather do that. Of course, everybody would. But you can store your IRAs. You can store it in the depository in Texas, the one in Delaware. But if things get really bad, say, fast forward 2, 3, 5 years from now, and you're like, man, I need to have some gold and silver at my house. You can always take part of that precious metals IRA and request physical delivery. So it'd be just like you were selling it. Of course, at that point, you'd have to pay some, the tax that you would owe. But Jason, it's a great option.
It's a great option, absolutely. There's so many good options when you deal with Patriot Trading Group. The IRAs, the metals program. A lot of people want to buy gold and silver, but they don't want to have to think about, well, what do I get and how do I get it? And, I've always told people, if you don't have a lot of knowledge, you don't want to waste a lot of brain space, then you got to find someone that you can trust on the buying and the selling side of gold and silver, and Patriot can do that. And if you get into the metals program, we pool all that money into one purchase, get the cheapest metals we can for that quarter, and then 4 times a year, once a quarter, you take delivery of whatever the cheapest metals we can get our hands on, right, Joe?
Yeah, it's a pretty cool program. And the nice part is the minimum, it's only $100 a month. Of course, now at that level, right, you get $300 at the end of every quarter. You're primarily going to get silver at that level, but still, it's another great option for you. $5 Liberties, they're on sale. $655, 20 or more, $650 at 800-951-0592. Jason and I will wrap it up right after this. Final segment here, the Patriot Radio News Hour. Joe and Jason, and the 10-year note rising further now, 465 and change, approaching 466. As the Japanese yen now 155.10, so it's getting a little worse here. But the Dow now, the S&P and Nasdaq, they're all negative on these higher rates, and it's really, I think, just trying to prevent more bad auctions. So you're seeing the rates now just climb up because if they didn't, these auctions would be even worse because no one's going to bid, 4.5% or 5% on a 5-year note. They're just not going to do it, Jason. Not when we got to sell this level. So now you're seeing the markets just trying to say, okay, well, it doesn't matter what the Fed or anybody else says. The market says that we need higher rates to support the amount of debt that needs to be sold.
How bad do you think the auctions will get? Is this going to continue to worsen, Joe, in your opinion, or is there some way of, getting people to come in and buy more?
Well, I'm going to say this. We've been talking about June again. It'll get worse in June. That's what you're going to see. You're going to see there will be some relief from the Fed when they stop quantitative tightening. So there will be some relief there. But when we get into that June, July, August, you're going to see another big increase in U.S. debt. And there's no tax, right? The April 15th tax days come and gone. I think you're going to hear the Treasury once again having to start talking about increasing auction sizes to accommodate the amount of debt. And you got to remember, Japan is going to have to intervene here. Yesterday, we told you about the problems with the South Korean banks. They're going to have to intervene, which means what? They sell dollars. They're going to sell treasuries, which means more of them on the market, Jason, for sure.
But they also, I guess we'll have to talk about this more on another time, but I mean, they still are buying this stuff. So I guess there's slippage is what we're looking at. And how much slippage is there? Because with this higher rates, there is some buying going on. But as you're saying, the buyers are becoming less and less and less. If rates go up, will they continue to be buying, or will it just stop, I guess?
Yeah, you know what? That's going to be something where when we look at this, it's not like there's not buyers. It's just the deterioration, and then it's what are the buyers willing to bid? That's really the case because these are blind bids. You submit the bid, and either you're in the money or you're not. And obviously the U.S. government, hey, we want to pay the least amount of interest we can, so they fill all the best bids. Right? That's okay. Whoever wanted the least amount of interest, we're going to sell you that. You want $1 billion and you bid the least amount of interest, we'll let you win. The problem is to sell the amount of debt we need to sell, there's not enough people willing to bid at the rates that Wall Street wants on these paper rates. And this is what causes what we call the tails, where these bids that are way out of the money. Hey, I'm not taking 4.6. I'm not taking 4.65. I'm not taking 4.7. Right? I want 4.75. And I think this is what Jamie Dimon was talking about. And this is why you're going to see gold and silver go higher again. Buy it today. You've had a nice little pullback here. $5 gold liberties, 1 through 19, $655. 20 or more at $650. 800-951-0592. Jason and I are coming right back with the half.